right, Alan, we've got a little softness, but last week we ended near the highs. We ramped back and made up a lot of our losses. So where do you sit in this market?
So that was a very strong turn that we saw. Let's remember the Dow was down 1,000 points in 2 sessions. When it was all said and done, we saw mixed markets where we actually had tech up on a weekly basis. The Dow was down a little bit and the S&P was relatively unchanged. What we did do was made new 30-day lows in the S&P and the Dow, and then come back. We're only 3%, or we were coming into this morning, 3% off the all-time tip-top highs in our major markets. What was important to me is the VIX. The VIX last week, actually with those new relative swing lows, 30-day lows, the VIX was negative on a weekly basis. So that I view as a positive.
All right. Viewing it as a positive, VIX back down below 18. Obviously, Alan, we're still elevated, but look, this has not been a big sell-off that is extended. It has been at like mini corrections. That was a story in August. It was a story in May. It was a story the last trip down too. It's almost like we're kind of just wiping off the froth a little bit clean without having to go through massive corrective mode. You think that's a positive thing, or do we still need a big washout?
Well, what we saw last week was very significant technically. We dipped down to the 2040 level in the, the 2940 level in the S&P, which was the previous tops that we had in August. It took 4 tries to get through that level. So as markets often do, they come back to their breakout points. So that had been a ceiling. Now it was a floor, and you can see we moved back above that pivot, and the markets really took off on Thursday and Friday when we moved back above that level, which is significant to watch on a weekly basis. So for me, it's still up and away.
Yeah. All right. Now, Alan, what about when we get back to VIX 13 and if we get back to S&P 3000? Do you still believe this market is trapped in a cage until we get updates on trade?
I don't think so. I mean, we've beaten this to death. I mean, it's the issue to talk about, but the reality is it's about earnings and earnings expectations for the quarter, which you just said coming up here in the next couple of weeks with the banks. Earnings expectations are low again, so they're expecting negative 4% earnings growth. So again, a low bar to hurdle, and the choice, especially with another rate cut coming here in October, the choice for yield is still no choice, and it still has to be stocks and equities.
All right, that being said, you're looking at a group that a lot of people have left for dead if they think the Fed's going to keep cutting. So where do you want to be in a Bank of America and a financial type stock?
Well, again, it's about risk reward for me. This is a stock that's paced about with the Dow, about 15% higher so far in 2019, but it is 10% off the highs that we made back in April. This stock is stuck trading between 26 and 30 mainly for essentially the whole year, and 28 is the midpoint, and we just pushed above that here recently. Another push above that 30 level sends it to 34 technically. And let's remember, this is a sector that's never fully recovered from a financial crisis more than a decade ago. So I still think there's more upsides in banks. And let's remember, when you see these numbers, these highlights come out of the net income, Bank of America has made $7 billion in profit each quarter the last 4 reports.
All right. So look,
profit
ahead of earnings, Alan, look, when we get these earnings coming in, are these bank expectations now finally getting to the point where there could be the potential the market kind of goes, look, yield curve, it's been trying to wind down a little bit, even with expectations of October coming back in. If the Fed's not going to go on a huge cutting spree from here, I mean, is that still not kind of what drives the narrative around these stocks?
Well, banks make a lot of money in other ways. And as you know, there are many revenue streams. And again, I can't stress again, the $7 billion profit, pure profit, each and every quarter for the last year. That gets my attention. So they know how to make money. And yeah, there is some limited downside. How many more times can they cut rates? I mean, so is being a concern? I don't think so. The way I'm looking to play this is with an option, as I usually do, a stock substitution strategy, buying an in-the-money call. I talk about 26 being the bottom base for the year. So a 26 call for December is trading about 285. Now that option's 225 in the money, so the break-even's only 60 cents higher at expiration. It's got plenty of time. This option has 79 days or something, 74 days, and it's only $25 more expensive than buying the November option. So for an extra month of time, it's certainly worth it. It would be malfeasance not to buy the additional time just in case you need it.
All right, I like it, Mr. Nuckman. Always very good, thorough with us, talking technicals and more. Alan, appreciate it. He's the Chief Market Strategist.
Thank you.
At Agora Financial.